Welcome to Construction Genius. What if buying a truck at the end of the year was not your best strategy for minimizing your tax burden? This is just one of the items that we touch on here today with Susanne Mariga. Susanne Mariga is a CPA and fractional CFO specializing in high net worth strategies for 7 and 8 figure entrepreneurs using the Profit First system. Some of the topics we cover are: what are the first things a company should be doing to maximize their profits in 2023? The psychology of achieving your profit goals, and how you can recession-proof your business. In addition to diving into some tax strategies that could benefit your company, and some of the dangers and opportunities of expanding into government contracting. It's a very practical, down-to-earth, simple, and direct discussion. Those are the kinds that I like, and I know you'll enjoy my discussion with Susanne here today. Thank you for listening. This is Eric Anderton, and you're listening to Construction Genius, a leadership masterclass. Thomas Edison said that genius is 1% inspiration and 99% perspiration. If you're a construction leader, you know all about the perspiration, and this show is all about the 1% inspiration that you can add to your hard work to help you to improve your leadership. Susanne, welcome to Construction Genius.
Thanks for having me. I'm excited to be here today.
Yeah, it's awesome. You're an expert in profitability, so I would like to ask you, what's the first thing a construction company should be doing to maximize their profits in 2023?
So 2023, it's a year of flux and change. And Eric, you've heard the rumors. I think I've been hearing them for a couple of years now. This dooming upcoming recession. I've even heard people say that we are in a recession, but for some strange reason, nobody can find employees. Right? Everybody has a job. In fact, for every 10 people that are looking for a job, there's 16 available. So that definitely doesn't qualify as a recession. And so I think what's really important is it's about having good practices in place, right? Having good practices in place that adjust to the times that you're in is really what it is, because we've seen contractors where they may do high-end work and they may be seeing a slowdown in the high-end type of work. Or I know we're here in Texas, we had a snowstorm a few years ago and we had a lot of people doing chimney repairs. And suddenly, when it's been El Nino or talks of La Nina and things like that, there's nobody's looking about wanting to get their chimney repaired because, there's no snowstorms happening. But it's really about adjusting to the times. And one of the things that I like about Profit First, for you guys that may not know what Profit First is, it's about creating intentional profitability. So in Profit First, we have an account where, kind of like Dave Ramsey's envelope system, all the money goes into one bank account. We call it the income account. And then what happens is twice a month, we allocate money to specific bank accounts based upon their purpose. So, we create that intentional profitability. We actually have a bank account called Profit, and we allocate part of that revenue to our profit account first. And then we fund owner's pay because it's extremely important to pay yourself, right? I can't tell you how many companies I meet every day where, I ask the owner, how much are they getting paid? They're either getting a fixed payment of maybe $100,000 per year. And even though their company is doing amazing, they're keeping their salary fixed or they're not paying themselves at all. And so we actually put aside a percentage of the revenue towards owner's pay. And because you're successful, naturally, you're going to have taxes. You have the best of accountants. If you are driving that Bugatti, you're going to have taxes. So we're going to put away money for taxes. And then, of course, whatever's left over can go towards operating expenses. And so when you have a system in place where you are creating limits, right? And that's what Profit First is doing. You're creating a limit in your operating expenses. For example, the more that we have of something, the more we're going to use of it, right? I think of like going to the buffet. You eat a whole lot differently when you go to a buffet versus when you go to an hors d'oeuvre dinner. And that's the same way with money. When you've got unlimited budget, when all of your revenue can be allocated to operating expenses, suddenly you need to have new equipment, right? Suddenly you need to have those new trucks, right? Maybe you need a whole new fleet when you have that money. But when you're allocating just a specific budget, now you're going, okay, I'm filling some constraints, I'm filling some limits, and I have to adjust to those limits. So first of all, creating a cash management system that works for you no matter what the economy is, right? That's based upon percentages, a percentage of money going to my profit, a percentage of money going to my operating expense account, a percentage of money going towards my owner's pay. Once you have a system, no matter what happens, you're going to be able to adapt. The second thing I would say is...
So let me ask you a question. Yeah, hold on a second. Let me ask you a question. No, it's cool. So you mentioned having good practices. And you mentioned these particular buckets of money, the profit, the owner pay, the taxes, and the operating expenses. I just want to make sure I'm following you so far.
Yeah, you absolutely have it.
Okay, cool. Let me ask you, in terms of the percentages that you allocate to each one of those, do you have any particular guidance or any kind of insight, or is it just something that each company should be able to come up with on their own?
So in Profit First, we actually have fixed percentages, and it's based upon the revenue of a company. So with construction, we know that a lot of it's going to go to your cost of construction, right? So we're going to factor that in and subtract that out of your real revenue. And then the rest of the money is really discretional. And so we do have fixed percentages that I use. What I can do, Eric, is I can give you a link to use in your show notes so that your audience can see what our recommended guidelines are in terms of percentage of profit, percentage of owner's pay, percentage of tax, and operating expenses, so they can use that for their companies.
Okay, that's excellent. So let me ask you, why is psychology as important to reaching your profit goals as getting a handle on your actual numbers? What do you mean by that?
So, first of all, it's understanding human nature, right? Understanding how we're created. And so many times you meet these gurus and it's all about self-discipline. And although self-discipline is really important, at the end of the day, when we make it when we make it easy for you, when we make it something that you can actually grasp and accomplish with little effort, you're going to be more successful with it. And that's the reason why I do like the Profit First method, is because, suddenly, you're creating these buckets, you're creating these parameters. So if my natural tendency is to, if I have a tube of toothpaste, for example, and it's completely full, I'm not bothered when my husband squeezes it from the middle, right? But as we get to the end, it's all about conserving. We're squishing that, we're rolling that tube of toothpaste. Same way it is with money. And so it's working with those natural biological factors, right? That, I think one of the problems that we have in school is we teach our business owners this accounting equation, which is great. I'm a CPA. I love the accounting equation, revenue minus expenses equals profit. But the problem with that is a lot of times profit is left over, right? Because we're focusing on those millions of dollars in revenue. Then we're focusing on being responsible so that we can get bonded, right? And so we're responsible about maintaining those expenses. But then profit is literally, I have companies coming to me and they're like, what's my profit in a year? How much do I owe? And they're not prepared. And so by creating that system in place and actually taking your profit first, revenue minus profit equals expenses, you're prioritizing your profit now. And you're controlling what that profit is. And the emphasis is on not just revenue, right? Because you can have a $50 million company that runs at $1 million loss, but it's now focusing not just on revenue, but also on profitability, and then squeezing those expenses to fit in what we have.
Okay. So let me just recap that. You use the formula revenue minus expenses equals profit. And then you flip that by saying revenue minus profit equals expenses. And what you're saying is that is the psychology or the mindset that you need as you approach reaping the maximum amount of profit from your business.
Exactly. The focus is now on profit.
Okay.
And so that means I'm going to look at my gross margins, right? I'm going to look at which jobs, there's something called Pareto principle, that 80-20 rule, right? And what the 80-20 rule says is that, 20% of my clients, 20% of my projects are producing 80% of my bottom line.
Yep.
And so now I'm taking that step back. I'm doing that analysis and I'm going, okay, which companies are producing that 80% of my bottom line? What types of jobs are producing that? For example, if I'm doing concrete and I'm doing dirt, maybe dirt is more profitable, right? In
Sure.
this case.
Sure.
So again, it's just looking at where are my gross margins? What are the trends? How do I increase that profitability and focus versus just trying to get to that $100 million mark?
So what are the biggest mistakes? Let's assume that I'm a contractor. I'm sophisticated enough that I know that I need to improve my profitability. What are some of the biggest mistakes or areas that contractors miss that could have the most significant impact on their profitability?
So I think right now in 2023 is, the variability in pricing and the estimating. And, you're looking at prices that are extremely volatile, right, in the inflationary marketplace. So really
Sure.
honing in on those estimates, I think, is really important. I think an area right now that's very high risk is we are in a volatile economy. Nobody knows what 2023 is going to look like in December. Right now, the stock market is roaring, but we don't know. And so it's really important to remain agile. So really watching those fixed contracts. So if I'm getting in contracts like leases that are longer than a year, or even I've seen things like even as silly as copier leases,
Sure.
very expensive copier leases. Again, you don't know what your environment is going to be like in a year from now, right? And so the more you allow yourself to be flexible, the more you allow yourself to shift out of a situation that isn't working for you, the better off you're going to be with that.
So it sounds like what you're talking about is taking a hard look at your overhead and determining where that overhead is draining your profitability. Did I hear that right?
Exactly. Remaining nimble.
Okay, good. So how can I distinguish between overhead that is necessary and overhead that is kind of fluff and not necessary?
So one of the things that I like to do when I'm doing my budget, and this is like literally taking my P&L, looking at every expense, or even grabbing the bank statements, right, is I'm looking at for things and I'm asking myself when I'm looking at each line item, what's the ROI on this? What is the return on investment for this? So I'm looking at it like, okay, for example, our firm, we use Infusionsoft. We use something called Keep. And on its own, it doesn't necessarily produce income, right? But it allows us to do the mass communications, right? It allows us to save time because now instead of like, having a client not show up for a meeting, we're scheduling a text that's automatically being sent. And so now we're increasing the probability of that prospect or that client showing up to the meeting. And I don't have to have a person involved with calling them because they're getting these automated messages. So what it's doing, it's saving me money on the people side, right? I'm automating, I'm getting more efficient. So really looking at what's the ROI, is it producing a direct ROI or is it allowing me to use less resources that creates an ROI?
Excellent. So what are some steps in addition to the ones that you've already shared for a business to recession-proof at their company as they're going through the ups and downs of the economic cycle?
So that's a very good question, Eric, with recession proofing. And it's going to look different for everybody. But again, like we talked about, remaining nimble is very important with that. I think budget, at this time, I meet so many people and granted, I'm a CPA, so I'm a bit of a nerd, but, so people are like, I do my budget in December, I do it in January, and we just stick with it. A budget should be a living document, right? You may be like hitting your projections 10 times by June, right? And that budget that you created in December or January isn't going to work for you. So every quarter, looking at that budget, but not just looking at that budget, looking at budget to actual, how am I doing? Am I having a lot more left over? Maybe I can increase my profit percentage or my owner's pay percentage and put away more. Maybe my gross margins are getting tighter, right? As I'm looking at this, maybe my cost of construction as a percentage of my total revenue is growing compared to what it was 3 years ago or even last year or even last quarter, right? Because now I'm able to detect inflation when that's happening. So really doing that budget to actual, looking at those common size percentages, looking at how are those percentages changing and adjusting to that is really extremely important.
And why do you say to look at this quarterly as opposed to, let's say, monthly?
I think monthly is even better. If you can squeeze that into your time, monthly is even better. I would say quarterly is the bare minimum.
Okay. Let's move a little bit, because you had those four boxes: the profit, the owner pay, taxes, operating expenses. So how much should I pay myself as an owner? One of the things I like about business is that you can do whatever you want in business. It can be whatever you want it to be. And that's one of the convictions that I bring to the Construction Genius podcast. And recording this in June 2023, I have yet to take on any sponsors, though people have reached out to me, including Manscaped, to sponsor the show. And the reason I do that is because I'm very protective of my brand, and I'm very protective of your time. The only ad that I will do on Construction Genius is for my own stuff, because it is awesome. And that's why we're talking about Construction Genius, the book. Yes, indeed. Effective, hands-on, practical, simple, no BS leadership strategy, sales and marketing advice for construction companies. Now, this is what you do. Go out to Amazon and purchase 10 or more copies of the book for you and your leadership team. Then reach out to me, Eric at constructiongenius.com, via email. Tell me, hey, Eric, I've purchased 10 copies or more, and I want you to come in and do a 1-hour question and answer and leadership training class for my team. The good news is I would normally charge you $2,500 for an hour of my time. I'm going to do it at no charge, and all you need to do is spend $20 per copy. So that's $200 on Construction Genius if you purchase 10 copies, and you will be able to reach out to me, and I'll do that workshop and question and answers for your team. It's a killer deal. You're going to love the book. You're going to love the workshop. And so you should go out to Amazon and buy those copies right now. Okay, that's the end of the ad. We're now going to get back to the conversation with Susanne. Thank you for listening.
Well, I would start with a percentage, right? A percentage. And Eric, I'm going to give you those percentages so that you can share in the show notes. But I would start with the percentages with that. Now, there's some tax strategy that you can employ too, right? Because at some point, you start to get hit with that excess Social Security and Medicare. And so maybe your accountant might want to do a reasonable salary study for you. But it really depends on the size of the business and where you're at with it. But I would start with, from a cash payout standpoint, looking at the percentages.
Okay, excellent. So then you mentioned tax strategies. I know many of the listeners to this podcast are high income individuals. They're entrepreneurs. They've built killer businesses. So they're making a lot of money. So what are some top tax strategies for high income folks that they need to be employing? And don't necessarily dive into the obvious ones that they may know, but what are some of the ones that they miss that if they took advantage of them, they would have the biggest positive impact?
So I think that, first of all, it starts with your goals, right? I think there are too many accountants that come to their employees, and I think that construction is probably notorious from this, is, the first thing the accountant says is buy more vehicles, buy more equipment at the end of the year. And unless you need that vehicle or you need that equipment, I would say never, ever do that, right? Because at the end of the day, yes, you're cutting taxes, but you're also hurting yourself, right? To get that deduction, especially if you're financing those vehicles, that type of thing. So first of all, starting with your goals. A lot of times with my clients, I'll look at them and I say, what's your long-term goal? And a lot of them will say, I want to keep my employees longer, right? Because the longer they're with me, the more efficient they get, the better they are at their job. They start to have more ideas. They speak up about those ideas. And so longevity is really important to me. And so I'll say, well, why don't we do something for that will potentially encourage longevity, at the same time give you a tax write-off. And what this might look like is, let's create a 401k plan. And in that 401k plan, it's not just going to be a simple safe harbor plan where you're immediately vested. We might create a vesting schedule that you might have to be with me for 5 years before you fully vest. And if you leave before you're fully vested, well, what might happen is you're going to forfeit those contributions that I made to you as an employer. So now I'm competing against the bigger construction companies, right? I'm offering an amazing benefit, but my employee benefits by staying with me. And if they leave me, then suddenly I'm growing my own net worth, right? I'm these monies that's been forfeited. They're going to be there for me when I retire. So that's another thing that I would do. And if you're a closely held company, meaning husband and wife, you're just using contractors, you can put away even more, right? You can put away almost $66,000 each into that, which is an amazing savings when you're in that 37% tax bracket. I love, that gift of apprenticeship. My dad hired me when I was 14 to be his bookkeeper in his accounting firm. And look at me now, I'm like a CPA,
Yep.
And for my dad, that was an amazing tax write-off and good experience for me. And again, it's another way of creating generational wealth. You can hire your children. And if you're in the right tax entity, right? If your tax is a sole proprietorship, and they're paid and your children are making less than a standard deduction, it may be a completely tax-free transaction to hire your children. And they can even put that money away in their Roth IRAs, which by the way is an after-tax vehicle, even though their taxes were zero. And now you're creating generational wealth. These children can either use it for their house when they buy their first house, use it to pay for their university when they go to college, or even when they retire on this money that they've never paid taxes on, right? And so again, you're getting tax deductions without necessarily buying vehicles. Excellent. Or buying equipment.
Okay. What are some of the biggest mistakes that people make when it comes to their tax strategies that would make them vulnerable to an audit? And how can they avoid those?
When I see that, I think that one of the things that triggers an audit are unusual skewed items, right? So you got excessive meals and entertainment. You're stopping at a Taco Bell every time you go to a job, right? That's going to be a problem, right? So really separating personal from business, I think, is really important with that. I think that's probably one of the biggest mistakes that I see. I think the other big mistake that I see is companies are growing without the right level of support, right? They're crossing into several million. They still have a bookkeeper, right? Or they don't have a system for keeping their receipts. They're not organized, right? And they're maybe at a point that QuickBooks just isn't good enough for them, right? It's not allowing them to really be able to not just analyze data, but really be able to produce the reports so they can really be able to or they don't have systems in place to really even save those invoices. And if you're going in an audit and you don't have invoices, you're in big trouble. So really making sure that you have the support level for the place that you are, that you separate your business from your personal, I think are some really key things that are really important for protecting yourself against an audit.
Excellent. Let me go to this, back to this idea of the recession strategies. One strategy that a lot of contractors use is when the commercial side of business starts to go down a little bit, they get into government contracting a little bit more. So if I'm going to expand my business into government contracting, what works and what can lead to disaster?
So I think one of the key things to keep in mind when you're dealing with government contracts is it's a request for proposal process, right? And what that means ultimately is it can be a race towards zero, right? It's the best value or the least expensive one that wins. And, it's very important to know when you're getting into government contracting that you hold your ground. It is sometimes better to walk away from a project than to accept a project, right? I know you can do change orders and things like that, but again, now you're getting into having to renegotiate and ask why were these things factored in the beginning, right? So it's really important to get that budget in place for that construction project and make sure that it's a fair bid for you, that this is something that you absolutely want to do, not that just be the best value with that. When I see successful contracts, the closer you can get to sole source, the closer you can be to being the only one that can provide this type of area or this type of service, the better off you're going to be, because it's going to become a less competitive, less bid towards the bottom type of ordeal.
Excellent. So as we're wrapping up here, if I'm a contractor and I want to start to get my house in order in terms of maximizing my profitability, really recession-proofing my business and taking advantage of some good tax strategies. Give us 2 or 3 takeaways that we can lay hold of and implement in our businesses immediately.
So the first thing, I would say is start with why. Right? I love Simon Sinek. Start with why. Start with what was important to you, right? And then everything else just follows. So in this case, profitability is important to you. So it's about having the system, the everyday system in place that can get you where you want to go, right? And the one that I've chosen is Profit First. I'm a major fan of it. I recommend it for everybody. The next thing is have the right level of support is really important for you. So, don't just be meeting. If you've got an accountant that you're meeting with once a year, that's not doing you any good any longer, right?
Yep.
You want an accountant that you're meeting with monthly, at least quarterly, right? That you're looking at that budget to actual, to helping you on the business side, as well as combining it with the tax side is going to be extremely important.
Excellent. Excellent. So tell us a little bit more about your business, Susanne, and how people can get in touch with you.
So my background is I am a certified public accountant, and I'm with a company called the Mariga Group, and we provide fractional CFO services to 7 to 8 figure companies, and we're specifically implementing the Profit First strategy with those companies to help them be profitable. I always tell people we will never tell you to go out and buy a truck unless you really need a truck, and so we help you implement those processes that increase your profit.
That's excellent. And how
as well as the tax strategy.
Yeah, that's great. And how can people get in touch with you?
So the best way to get in touch with me would be through marigagroup.com would be the best way to reach me.
Excellent. Excellent. We'll have those links in the show notes. In addition to you said you had another link about the percentages that you should be allocating to those different buckets that we talked about earlier.
Exactly. I do. And I will go ahead and include those for you to include on the show notes.
Excellent. So check out the show notes for all that information. And Susanne, thanks for joining us here today.
Thanks, Eric, for having me. It was fun.
Hey, this is Eric. Thank you for listening to my interview with Susanne. Feel free to check out the links in the show notes. Get in touch with her if you'd like to know more about the work that she does with businesses. Thank you for listening to Construction Genius, and please give the show a rating or a review. And a review, actually. Not just or a review. We're going to go rating and review wherever you get your podcasts. In fact, I'm going out to Apple Podcasts right now. I'm recording this in June. And we have 4.8 out of 5 stars, and we have 140 ratings. So you know what I'd really like is by the end of this year, I'd really like to get that up to 200 ratings. And whatever rating you think we've earned, please give us that rating between 1 and 5 stars. And that helps us to get seen throughout the internet, and it gets people to have the opportunity to listen to Construction Genius. And if you're listening at this point of the show, I know you like the show, so please give it a rating or a review, and more people can listen as well. Thanks a lot.